Good afternoon, everyone, and welcome to Stock Market Today. It's Ali Corman, Ed Carson here with a breakdown of the action in today's session and a look at how the week turned out. And Ed, it seemed like it was a pretty quiet day for most of Friday until the close. We had a lot of selling as the session wrapped up, as investors are looking ahead to next week, where we could see some market moving headlines with the Fed.
Yeah, it was an ugly close. It wasn't a very nice week either, that's for sure. I'm going to take a look at Dexcom, which had a nice breakout or attempted breakout on Thursday, and that sort of fizzled out. And then Caterpillar and MercadoLibre, a couple of stocks that are not actionable yet, but a couple that you want to keep a look at.
Okay, we'll take a look at those, but first let's analyze the major indexes. The Nasdaq today down 0.7% by sessions close. We'll also pop up an intraday chart so you can see the action there. The S&P 500 also down 0.7% today. Harder hit was the Dow, down 0.9%, and harder hit still was the Russell 2000 with small caps down 1%, and the Dow, that 300-point tumble there today, led to the worst week for the blue chip index in a couple of months. So not a very good week after some promising action in the week prior.
Yeah, I mean, we ended last week, basically, the Dow was basically at 7-month highs. The Nasdaq was at the highest in a couple of months. The S&P was above the 200-day line. Russell was above the 200-day line. So it looked like we were gaining momentum. Here we go. We're finally going to go. But what did we do? Well, we reverted right back, right back to falling, big moves and then pulling back. And that's, it's unfortunate. But, you see the major indexes, or a lot of them are basically where they were a month ago or even longer. Not really a whole lot of movement there in that time. So, and yeah, it's right around these levels where we found support, found resistance. And, despite various moves, it's really not getting in there. And that makes it so difficult to make headway as an investor, even though the stock market isn't really breaking down. It hasn't, we start getting worried here. I think this is at the point where it's like, if it starts getting weaker, okay, now you're undercutting a lot of levels, certainly the NASDAQ, but it wouldn't take much for the S&P. So it wouldn't take much for us to bounce right back, but it's just been this tricky area for quite a while. And I think until we get the Fed and the CPI, that's going to be important. Of course, we could get another situation. We've had these big moves on news, and then it fades again. So, next week may look decisive, and then it turns out it's not decisive.
Yeah, a lot hinges on next week, so we'll have to see what that brings. Let's also take a look at the Russell 2000 via the IWM ETF, and looking at a weekly chart here, we could see a 5% decline for the week with a finish below the 10-week moving average, Ed. So a breach of a key support level there.
Yeah, it's not a good sign here. The S&P, the Russell was one of the stronger indexes, and now it looks like it's the weakest one. I mean, it swings a lot, so that it's not that out of character, but not good to see it starting to really, bend through these areas. Not a good sign for breadth. It was nice when the S&P 500, the big cap index, and then the broad small cap index, they were moving higher. The Dow was moving higher, and now it's moving the wrong direction.
And let's also take a look at the Dow, which has been leading. And I guess, we don't want to see solid weekly losses, but I guess it does make sense that this would be an area to see some sort of pause. I mean, this is a pretty strong run up from the lows. So, it seems like best case scenario, we do get just like a small little orderly pause here, but we could see even more of a pullback. That's definitely not out of the cards. And again, we still have the unknowns coming next week.
Yeah, I mean, look, if the market looked like the Dow, if this were the S&P, we'd be in a much happier place because a lot of stocks would have worked. I mean, even though there's been some pullbacks this week, generally there would have been things working. There have been some things, but yeah, so this wasn't great. It closed just below the 21-day line, but looks a lot better than these other ones. But yes, if this continues, this is the best part of the market, and it didn't have a good week.
hmm And we still have quite a lot of distance between the action and the 50-day line for an index here. So it does seem like either, we could see stocks continue to pull in, or will we pause here, get the moving averages to catch up a little bit? We'll have to see what happens there. Moving on, let's take a look at the 10-year Treasury yield, 0 TNX here, moving up today, bouncing right around that 3.5% level, going on a weekly chart. So reversing higher by the end of the week, whereas midweek we got down to the lowest levels in a couple of months here. And we have started to notice a little bit of a breakdown in that inverse relationship between the day-to-day moves, not like there's ever been a one for one, but it seemed like there was some interesting moves this week where you would think that, or historically, when we saw rising rates, the market would come off, but that's not exactly what we saw play out earlier in the week, with rates coming off that didn't really provide a boost to the market.
Yeah, falling rates are no longer really suggesting, especially on the long end, not really suggesting lower inflation. It's more like higher recession risk, and that's not good news for stocks either. I think the concern is that the Fed will feel compelled to raise rates so much that it really pushes the economy into a pretty significant recession, really hitting the stock market. That's somewhat the focus of our A1 story, our front page story this week, talking about will the Fed have to sort of give way and sort of declare victory on inflation a little bit earlier than they might have otherwise. It's because it's just a difficult spot we're in right now.
Mm-hmm. Okay, next on our list, let's take a look at some ETFs. First, energy, which has been one of the strongest sectors this year, definitely taking a big hit this week. Look at that. XLE down almost 8.5%. And we have USO, a proxy for oil prices, down 10% this week, undercutting the lows from late September. And so down to the lowest levels this year, it looks like, Ed.
Yeah, that's what crude oil fell 11%, I believe, to around $71 a barrel. Really sharp drop. That could turn around, sure, but gasoline's also the lowest. That's good news on inflation, but really not good news for energy prices. And that reflects, again, recession concerns to a great extent.
Mm-hmm. And just like how with individual stocks, we talk about using a decisive break of the 10-week line as a sell signal. I mean, that's definitely what we're seeing here with XLE and a lot of stocks underneath the surface in this sector, showing this kind of action too. So at the very least, Ed, I guess that signals rotation elsewhere. Or, I mean, we've seen this group just moving a lot over the last 18 plus months. So could it be time for, instead of, the last time we saw a big break of the 10-week line earlier this year, it took a little while for things to turn around. Could we see that again, just a little bit of a rest and a digestion here? Or is this really topping action?
I mean, it really depends on oil prices. I hate to be like, it all depends, but it does seem like it's going to take time to repair. Like it's not likely to say, oh boy, these stocks are going to look good if oil bounces and everything's going to turn around. Just going to have to see how this plays out. And I don't think anybody knows how the economy is going to play out. And of course, there's OPEC and everything else. So a lot of uncertainty on that front.
That there is. Next on our list is to take a look at metals and mining stocks, with XME here down about 6.4% for the week. And this was an area that was starting to look pretty good and trending here. Looks like it is coming off a bit. I mean, and that's a pretty solid weekly decline.
That is a solid weekly decline. You can imagine if things turn around, like, oh, okay, we get a positive report, positive this, that this and a lot of other things rebound. I mean, so there's still some interesting mining and metals, and there's a lot of gold, there's coal, but this was a sharp drop, and it's pretty broad based, a lot of these losses.
Mm-hmm. And XHB, which tracks home builders. Let's check in on that one. Maybe some setups here, down just 2% for the week. So holding up relatively better.
Yeah, and this is a long slide. A lot of home builders, housing retailers. Maybe there's so many things that could be promising, but you can see how this would be damaged. Like a week or so ago, you can see how it sort of moved out a little over a week ago, just like the S&P. But you can imagine that there were some breakouts or early entries that then fizzled because that happened. And yet it's not in a bad place, but it's hard to make headway.
Exactly. Yeah, that's the story right now, isn't it, Ed? We're seeing a lot of that. Also, here's a look at SMH on the daily, seeing some pretty clear resistance right there at the 200-day line, but trying to find a nice solid floor here, getting support around the 21-day for the week, down about 1.7%. So we're seeing a lot of tight closes here being put together after a really strong week for the chip sector in November. So it seems like now that we've created this range here, are we going to break out of it to the upside or the downside?
Yeah, and that's the question. Wouldn't be bad if it went sideways for a little bit because a lot of these have run up a ton, and could use those 50-day lines, 10-week lines, even just a 21-day line to catch up. I mean, it is on SMH, but just to catch up, that would be nice. But it's this is a little bit of a positive. If you had to say one of the positives out there, chips held up relatively well. Chips, if you want to see a rally without, rally sort of needs chips, and chips are they're trying to come back. And so that is something to watch out for. If that can move higher, that would be a really good sign for the market.
Mm-hmm. And XLV, let's check out healthcare land, down 1.3% on Friday for the week, down 1.3%, but 4 weeks up in a row. So not all too surprising to see a little bit of a down week here.
This is strong. A lot of stocks in this sector are doing well, and in a choppy, uncertain market and economy, there's a lot of reasons to be paying attention to healthcare.
Yeah, pretty strong uptrend still intact for this sector at the moment. All right, now let's take a look at some individual names. Let's take a look at Dexcom, DXCM, promising attempted breakout on Thursday that really fizzled in a pretty big way on Friday, Ed. So shares coming off about 5%. Volume was slightly above average. It's not a broken stock, but again, this is the same story, new chapter, breakouts that quickly fail.
Yeah, and this one was fizzling and struggling even when the market was going sideways. So I was wondering, that's part of it. It's not just that the market's going sideways or up and down. There's sector rotation, there's stock action that'll happen aside from the market. So, that's that much more gyration. Yeah, this looked good. There was positive FDA news. There's some good blue spikes in there.
Mm-hmm.
There's been some good action. And as you say, it's not broken. It just came down to the 21-day line. It's a little below sort of an early entry as you sort of drew it there. So it's not broken. I think on a weekly, it was down a little bit. I mean, it's an ugly looking, it's not a good close, that's for sure.
Mm-hmm.
But you can imagine it bouncing back or consolidating for a couple of weeks. But then again, maybe not. Maybe it just keeps on falling. That's why it's so tricky. That's why it can be not just difficult on your actual monetary capital, but your emotional capital. What do you do here? If you bought it, do you sell it and then watch it rebound, or do you hold it and then watch it go down 15%? You'll question yourself no matter what you do. It's still worth watching. This one may set up again, but yeah, it's that kind of market.
Yeah. Definitely shows you the difficulty of buying strength in this market. I mean, even when you look left on the chart, because I feel like now it almost kind of feels like breakouts are never going to work. I mean, and I even think in a stronger market, I think I'm still going to prefer going with those earlier entries just to get that cushion by the time a stock breaks out. And then maybe we can actually be in a market where you can add on a breakout instead of take profits at a breakout. But if you look left here, I mean, breakouts have worked. Buying strength has worked for this stock. Not every single time, but it just feels like right now you really want to be careful about buying strength.
Yeah, I mean, you just think about the psychology of it. It's like the situation. One reason why an early entry is risky is because there's still some resistance within the base. There might be, it's still sort of got a slog through. It's like going through a trail that isn't really well trodden. It's just a little tougher. But if the uptrend is only 3 weeks, you get a chance to get something. That's why when it's if the rally goes on for 6 months, it's nice to get an okay. When you get a breakout, everybody's happy. Everybody's happy they're there. Nobody wants to sell,
Mhm.
but that's not the condition we're in. So yeah, that's why early entries have been so much more successful in the past year or so. And eventually that'll change. But when that changes, we'll have our opportunities because then it'll be a long sustained uptrend.
Right. Okay, well, we'll still keep a watch on Dexcom. It's got that blue dot, but man, what a difference a day makes. So
Yeah.
it just once again reminded to be very careful of those breakouts. And next on our list, let's take a look at Caterpillar CAT. We've been talking about how industrial stocks have been of interest, seeing a lot of buying demand coming into stocks like Caterpillar over the last couple of weeks. Put in some relatively tight closes here, down about 3.8% for the week here, Ed. But if you go on over to a daily chart, this is a pretty orderly pullback, trying to find support around the 21-day line. And we'll disclose that I do have a teensy position that I initiated yesterday with a pretty tight stop here.
Yeah, I mean, you could argue that this was a decent shakeout. I mean, we saw it on the weekly, but it's there, sort of. It pulled back through the 21-day line, got a bit of a shakeout that it really hadn't had, especially after such a long run.
Mm-hmm.
So it could be constructive. Even coming down to the 10-week line,
Yeah.
especially with the 10-week line racing to come back up, wouldn't be the worst thing.
Mm-hmm.
It has this cut base. Right now, it's 4 weeks into what could be a flat base, so it could have a flat base essentially right next to it, which is often really nice. You get this big deep base, and you're not sure where to
Mm-hmm.
buy it, and then another base shows up. So that's good. And as you say, there's a lot of construction, equipment makers, retailers, and various plays in this space. So this is a space that seems to be doing well, but doing well in a choppy market, it's just tough.
Mm-hmm. Okay, another watch list name there. Let's also take a look at MercadoLibre, MELI. It's been working on a bottoming base, and it's trading right around some converging moving averages, the 10-week and the 40-week line. Maybe we can see the stock continue to tighten up here a little bit, but this is one that does have all of those converging moving averages right here.
This one is more and more of a wild card. It was actually somebody brought it up during IBD Live, and it just got me intrigued. The thing is that this is when it's like there's something you want to keep your eye close eye. This one, maybe you keep it on the corner of your eye for a little bit. If it could break through, that would be a really aggressive entry, like it powerfully moved above there, or maybe like the December 2nd high, where it's still pretty close to all those moving averages. There's other entries, trend lines, or other things along their way. So there's places you could enter if it bounced back. On the weekly chart, just to show that, it's had 4 straight down weeks. On the plus side, the last 3 weeks have closed in the upper half of their range. And all of these weeks have come on lighter volume. I mean, not tremendously light volume, but lighter volume than some of these up weeks. So I'm not saying, hooray, look at this, it's obviously going. This one might just be wilting and now is about to crack. Okay, it might. So I want to make that perfectly clear. But it's one that has really strong growth. It should have a strong holiday quarter versus a year ago loss. So that's going to make that trend rate go favorably in that regard. So we'll see. Definitely one to watch. This could have a lot of growth potential, but may not be the right time for it. But just wanted to bring this one up as sort of a little bit off speed.
All right. Well, we gotta keep casting a wide net in this market, Ed. So, all right. As we wrap up here, let's talk about the battle plan for the week ahead. I mean, it's going to be a big week. Seems like light exposure is the way to go. Newer buys maybe made over the last couple of weeks. Hopefully, investors have been taking profits into strength, not overstaying their welcome. If it's trades that haven't been working out, uh, not holding and hoping, making sure that you're stepping aside instead of letting damage happen to your portfolio, and just staying ready for what next week might bring.
Yeah, I mean, there's probably not a real reason to make new buys until we get through, these reports. And let's remember, just a caution, even if the markets do jump on that data, again, you still have to be a little wary because we've seen this before many, many times in the past couple of months. So there might be signals and you might then step in that situation, but you'd still want to be cautious. There are a lot of things that are setting up or close to setting up. So if we did have a strong, reaction to this and we started moving higher, there's a lot of stocks from a lot of sectors that would start looking industries, industrials, mining, there's financials, there's definitely a lot of medicals. Even some of these chip names are looking interesting. It's like if you could just get a little bit of sustained strength. So you want to get that holiday shopping list ready for your stock market. It may end up being coal and not coal stocks, but you do want to be ready to go in case things do improve.
Exactly. Well said there, Ed. All right. Well, thanks everyone for tuning in. Coming up at 5 p.m. Eastern, join me on my YouTube channel with our fellow IUBD Live panelist, Harold Morris. We're going to be talking about option trading strategies. Harold loves using options along with his can slim strategy. So I'm going to ask him about what his favorite option strategies are, the situations that he uses them in. So it's going to be a fun discussion. Check that out on my YouTube channel, youtube.com/Alissa Coram IBD. I'll see you there in a little bit, and we'll all see you next week, starting back Monday morning on IUBDLiveInvestors.com/IUBD Live for all the details on our daily morning live stream. Always love interacting with our audience there. Thanks once again for tuning in, everyone. Have a great weekend.